Did you know you're not just a person? You're an investment? Congratulations! According to something called human capital theory, your education, skills, and training are basically stocks. The more you invest in yourself, the higher your future paycheck is supposed to be. Go to school, get credentials, collect certificates like Pokemon cards, and eventually, the market is supposed to reward you. Simple, elegant, and capitalism approved. This is exactly why our society treats education like a financial strategy. University is framed as a long-term investment. Job training is a short-term boost, and lifelong learning, that's just portfolio diversification. Learn to code. That's a high-growth stock. Learn a trade, a reliable dividend. Learn interpretive dance. That's a risky asset with high passion and maybe low returns. Human capital theory loves examples. Get a degree, earn more money, upgrade your skills, become more employable. Countries invest in education because educated workers supposedly make the economy stronger. Fun fact, economists in the 1960s pushed this idea hard. They argued that knowledge works like compound interest. The earlier you invest, the bigger the payoff. That's why you're told to invest in yourself while simultaneously taking on 5-figure student debt. But here's where the theory starts sweating. It assumes the market is fair and rewards everyone equally. Spoiler alert, it does not. Two people can get the same degree, same grades, and same skills, yet end up with very different outcomes. Because of discrimination, class, background, gender, race, or just knowing the right people. Turns out, networking can be a stronger currency than some degrees. The theory also ignores the cost of investing. Some people can afford unpaid internships, extra schooling, and years of training, while others need to earn an income immediately. Human capital theory calls that a choice, but sociology calls that structural inequality. Plus, not all education pays off equally. Some investments crash, some bubble, and some never recover. But the debt still collects interest like it's emotionally attached to you. So, human capital theory explains why society keeps saying education is the solution to inequality, unemployment, and basically everything else. Just invest more. Skill up. Rebrand yourself. Meanwhile, the job market is unstable. Wages are stagnant, and the returns are inconsistent. So yes, the theory helps explain how education and work connect, but it also shows how people get blamed when the investment doesn't pay off, even when the system was rigged from the start. Like and subscribe to Legacy Lab, and comment if you think education always pays off, or if the system is charging interest it forgot to mention. Thanks for watching.